Kia ora. Welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Bond markets are increasingly worried about what will transpire from the US CPI data for August later this week and the US Fed's reaction next week. First today, American inflation expectations seem to be rising. In August, they came in at 3.2%, their highest in 3 months. While that is higher than in year-ago levels too, some of the detail is a bit of a worry. Those surveyed say rents are expected to rise 6%, food by 5.5%, and petrol by 3.9%. Also of some note is that job-finding expectations have now fallen to a record low in a data series that started in June 2013. More than 14% of those surveyed say they're likely to lose their job in the year ahead. There is a palpable sense of fear and squeeze in these survey results. The fast-tightening labour market has many on edge. Meanwhile, August data for American consumer debt shows it rising, up 3.8% from a year ago, with revolving debt up a sharp 9.7% on the same basis. Debt levels at credit unions seem to be leading the rises. These are all 3-year highs, and the sudden shift likely indicates rising debt stress. And the US dollar is falling, heading towards a 3-year low. Benchmark bond yields are falling too, and the US Treasury 10-year is near a 1-year low. Across the Pacific, Chinese exports grew by 4.4% in August from a year ago, a level many others would like to have, but it is lower than the expected 5% and July's 7.2% growth. And it is the softest pace of outbound shipment growth there since February. Meanwhile, their imports are up 1.3% in August on the same basis, less than the expected 3% in July's 4.1% rise. But that has meant that their trade balance swelled to $102 billion in August, better than the $99 billion expected and higher than July's $91 billion. While China's exports and imports to the US eased back in August, they still ran a $24 billion monthly surplus with this strategic rival, and that isn't declining materially. It's the largest surplus they've run with anyone, although the combined nations of the EU ran a larger deficit with China at $28.9 billion in August. In Japan, Prime Minister Ishiba resigned over the weekend, and new candidates are lining up to replace him. Financial markets are buoyant there on the prospect that a new leader may chase fiscal expansion. And in France, their Prime Minister has lost a confidence vote. In Germany, their exports came in slightly weaker than expected in August when a rise was anticipated. But that was still a good gain on a year-ago basis and helped them maintain a healthy trade surplus. Meanwhile, German industrial production came in much better in July than expected, bouncing back from a weak June. The US Treasury 10-year yield is now at 4.05%, down 4 basis points from yesterday at this time. And the price of gold will start today surging to a new high of $3,633 an ounce, up $47 from yesterday. And American oil prices are a bit firmer, up less than 50 cents though, at just under $62.50 a barrel, while the international Brent price is also firmer at just on $66 a barrel. And the Kiwi dollar is now just on 59.3 US cents and up 40 basis points from yesterday. Against the Aussie, we're up 20 basis points at 91.1 Australian cents. Against the euro, we're also up 20 basis points at 50.5 euro cents. That all means our trade-weighted index starts today at just under 66.7 and up 30 basis points from yesterday. And the Bitcoin price starts today at $112,282 and up 1.1% from yesterday. Volatility over the past 24 hours has been low at just under plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.